Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. This video is sponsored by you and your finger hitting that like button. Hey, if you're new to the page, go ahead and hit the like and subscribe button. And you also make sure that the notification bell is selected. You guys know I don't have a WhatsApp, I don't have a Telegram, and I don't manage anybody's money. And lastly, this video is co-sponsored by Stock Up University, other known as Stock Up U. There is something in there for you, especially if you've been investing for under 5 years. Don't get fooled by the name. It is for you. Let's get right into it. We have banks that are the executives sold $12 million in stocks months before the crash, right? We have that going on with regional banks. We also have this going on. FTX's Sam Bankman-Fried transferred $2.2 billion would it be to his personal account from parts of his crypto empire, new bosses say. Where did that money come from? It was your money and my money. And for those of you that don't want any regulation, this is what happens when people have control and they know nothing is going to happen. There won't be one bank executive that go to jail. It just doesn't happen. That's why they call it white collar crimes. You and I, the blue collar workers, if we do it, we get put under the jail. They get away with it, all right? It is what it is, all right? I'm sick of it, and I know you guys are too. This happened in the 90s. This also happened in 2008, and it's going to continue to happen until they get this mess or foolishness under control. Now we have the FOMC meeting. The Fed will be doing his interest rate hikes next week. Now, I think 50 basis points is off the table. I fear that he may do 25 basis points, but I know that he should just go neutral. If the Fed next week, Tuesday and Wednesday, if he goes up 50 basis points, he is intentionally trying to crash the market. Yes, it will taper inflation, but he will crash the market. And we will instantly be in one of the worst recessionary areas that we've been in the last year and a half. That's where it is. That's just where it is. That's where I see it. Leave me a comment and let me know what you think. So there's pressure on him to just go neutral. You may say, hey, Larry, just last week you were saying he needed to do 50 or 75. Yes, until the last interest rate hikes. Yes, but it was until something breaks. Now that we see higher interest rates have broken the banking system, and it didn't break the banking system. It just exposed how weak they are. These banks had bad loans. They had locked interest loans, right? And then they were stuck in bonds. So they had bad bonds and bad loans while the Fed kept raising rates, okay? And then you have CEOs, SVB, over $3 million of his own personal stock he trades just before he goes and asks for or tries to raise 1.8 billion. All right. And so this is the kind of foolishness that happened. Now, this is what I want to focus on this video. And this is going to be one of my most important videos, I would say, this year. And I challenge you to watch the end of this. We're going to talk about a movie called Forrest Gump. And you guys are going to say, what? But I'm telling you that you'll get a lesson out of this like none other. I want you guys to listen to this video with everything you got. Some of you guys already know this information, a very small amount of you guys. And if this is true, just give me an amen so we can help the rest of the family. Listen to this.
He is editor with Empire Research and a CNBC contributor. Herb, welcome. It's good to see you again.
It's great seeing you, Kelly.
Is a time like this kind of get you all amped up to start tearing through balance sheets and all the rest of it? Or do you already feel like you have a pretty good handle on the exposures throughout the corporate world and in the banks?
Well, you always have to try to figure out where you may get hoodwinked. That's the way I tend to look at it. And I think in this case, what I'm always looking for is I start out by looking for stocks to avoid. And I think that's the way you have to start doing this. I did a piece the other day, 1,000 stocks to avoid. And the reason I put that out there is there are certain things you could look at that are pretty simple. So there's this chart out there. I don't know if you have the chart up, but it's an interesting chart from Kalish Concepts, which is a fundamental firm. Some folks I know I'm pretty friendly with. And they had something really interesting. And what they talked about was in the Russell 3000, there are 1,000 companies. Now get this, this is a startling statistic. 1,000 companies that either aren't making money or can't afford to pay their interest on the debt they currently have. Now, if you were to look at those 1,000 companies and if you strip them away, you didn't own them since 1989, the other 2,000 stocks would have well outperformed those stocks. So you always want to look for the companies that are just generally fundamentally stronger, even though they may not be as sexy, they may not be as exciting to follow, to talk about, but sometimes they're the ones that are actually going to do better over the long term. And maybe they have to continue to borrow. If they have maturities coming due right now, that's something you have to pay attention to, especially if it's a large chunk. Tyler, if it's a large chunk of what they have
so
coming due.
So if I take 3,000 and I subtract 1,000, that still leaves me with 2,000 out there that presumably are investable.
Excuse me, I do it. I actually use a system that helps me weed out anything where there looks to be earnings manipulation or I'm looking for the strongest quality of earnings. I'm looking for the strongest balance sheets. I'm looking for anything where I can avoid getting tripped up. So, there are companies out there. Look, some of them are just so obvious right now, that are good ones. A company like a Costco, right? You look at a company like this in an environment like this, and I know people talk about it all the time. It's one of those companies. But you talk about it, you say, my goodness, these guys are basically telling you, if you listen to their conference calls, that if all else goes wrong, they can pay a special dividend because they generate so much cash. For example, there's a bank I like, a community bank. Who wants to talk about community banks right now? Regional bank? Nobody. But I like this one company. It's called Triumph Financial. It's based in Texas. Small bank. Here's what you need to do with a bank like that. You take a look at the maturities on its securities. They lay it out in their financial filings. They have, and you compare it to, say, Silicon Valley Bank. It's night and day. These maturities are spread out across, 0 to 5 years. And you also have a situation where the held to maturity securities are just a tiny bit of their entire portfolio.
So now the bank that he mentioned, I have on my watch list. So here's why we're going to talk about Forrest Gump. Remember Jenny? Jenny gave poor Forrest Gump his very last. I almost cried when I watched that movie. Jenny wanted the bad dude. She wanted the wild guy. Some of us want the hot stock. We want the stock. We want the hot play every day, every day, every day. When the good stock are the ones that is so good, we just think they're no good for us. So Jenny thought that Forrest Gump was just too good for her, right? And she knew he was a good dude, but she wanted the wildcat. Remember that scene when the hippie dude smacked Jenny? Remember that? And he smacked Jenny and Forrest Gump just went ape crazy on him and just took care of him. That dude is the bad stock. That's the hot play, right? But Forrest Gump, that's the dude that got your back. He went to town on him. Forrest Gump is the dude that got your back. That's the good stock, like he was just talking about. Those are the stock that have money that's going to last through when the third leg drops, when these companies need to have enough cash, when they will have enough cash to not even suspend their dividend. And even if they did, they can raise funds, okay? Or they just cut their dividends in percentage and not all the way, while other companies are cutting them all the way. At the end of the day, good people, you don't want to just be Jenny and then lose all your money and then come back when you are on you about to tap out of the market, right? Y'all do know that Jenny died. Y'all know Jenny died. It's because Jenny kept chasing the hot stock, the hot plays. And the good stock, like he was saying, a boring food company, the Costco's of the world, they're boring, right? Right? They're boring. There's so many good stocks. Like he said, the Russell 3000, 1,000 of them are bad. Just scratch them off. But I can guarantee you in that 1,000, those are some hot, sexy stock. But we're looking for that. Now, what we need to do, family, is we need to learn in a high inflation, a bear market heading to a deeper recession, because we're already in a recession. Now we got to be very careful what we pick, right? And we have to understand what a balance sheet is. For those of you that have taken the class and you see, and we're not done dealing with the financials and balance sheets, but if you learn something about the balance sheet and how to read it and what it means, please leave me a comment. And help the family. We need to understand we can't just buy a company anymore. We have to see if they have capital, right? So if we do go into a elongated recession, we're already in a recession and we're heading to a deeper recession. If the market trades sideways for the next 2 years, does that company have enough money to last? Is their debt, is their liabilities going to consume their income? That's what you don't want, right? You want them to have a free operating cash, and you need them to have a good PE, price to earnings, okay? And so that's what we need to be picking right now. Even through all of this turmoil, that is why I wanted to make this video. And it doesn't matter if you take my class. Go and get as much free information as you can. I want everybody to be educated. Be educated, because you'll be like Jenny. She want the bad dude smacking her around. You saw it. I played the clip. These stock take your money. They put you on the sugar high. They ride you up and they drop you low. And then you go, oh. And then what do? You wait on the next dude or the next stock to pop up, but it's going to turn around and drop you low. So stop putting all your money, chasing it all in the GMEs and AMCs of the world, all right? In the Mullins of the world, or in the Carvanas of the world. Don't put all your money in that. Now is the time to be looking at some long plays. Remember, that's why we're staying 85 to 90% cash here, right? Because I know what's coming. And if you can't see what's coming, I made a statement earlier in the week. Don't listen to what the market is showing you. Listen to what the market is telling you. Let me rephrase that. Don't look at what the market is showing you. Listen to what the market is telling you. It's telling you it's short-term bullish, long-term bearish, right? I'm going to leave it right there. Sorry if this goes a little lengthy, but I want to get this message out and let this message go throughout the weekend. I hope in all of your getting, you get an understanding so you can make money. This journey is for you. When the market does drop, I don't want you to go, I'm tapping out right now, I've had enough, because that will be the time to start going in. Make sure you check out the 2 top links below. I'm going to put those right together. It will be for the class, cheapest one out there, especially for what you get. And below that will be Moo. All right, 17 free stock there, depending on your deposit amount. We will see you. Have a blessed weekend. Live, love, laugh, and learn.